KOSPI rises 1.62%. Memory oversupply concentrates chip selling. Now that sounds like a straight up victory for the broader market, right? Well, hold on a second, because right beneath that shiny headline, a massive, highly concentrated tech sell-off is quietly changing the entire game. Welcome to today's Explainer, where we're going to break down exactly where the smart money is moving right now. Let's dive in. So, on August 4th, 2026, the KOSPI index closed up 1.62%, sitting just over 6,358. On paper, that is a phenomenal headline number. But as you'll see, the internal dynamics of the market are actually shifting way faster than that simple percentage suggests. Initially, the stage was completely set for a massive rally. Global macro pressures were easing up, and we saw oil drop to $80.69. This naturally pulled down U.S. Treasury yields and gave some really solid direct support to global equities. And sure enough, the index actually opened higher, totally riding on that U.S. market strength. But then, boom, a massive semiconductor shock hit. It was so severe that it literally erased all of those early gains within just the first hour of trading. We're talking brutal, aggressive profit-taking striking the tech giants. But here's the thing, this wasn't just some broad market dump. Foreign and institutional capital surgically targeted just two major names. Yep, you guessed it, Samsung Electronics and SK Hynix. So, what was the main catalyst here? Well, a Reuters report dropped revealing that China's top memory chip maker, CXMT, is actively reviewing plans for a massive, and I mean massive, new DRAM plant right in Beijing. Now, considering CXMT already commands a solid 7.6% share of the global market, the prospect of them adding even more production immediately triggered extreme fears of a memory oversupply. It basically sent a shockwave straight through the market. And the resulting foreign capital flight? Totally surgical. Net selling of SK Hynix alone hit 635.5 billion won. To put that into perspective, because they were simultaneously buying up other sectors, this single stock accounted for a staggering 171.8% of all foreign net selling. Basically, they wanted out of this specific risk, and they wanted out fast. Meanwhile, domestic institutions were moving in exact lockstep. They dumped nearly 928 billion won of Samsung Electronics, which amazingly equaled 172% of their own net selling. The big players were just aggressively slashing their memory exposure across the board. Yet, despite these tech giants absolutely bleeding, the broader market didn't crash. Actually, if you look at the heat map here, the KOSPI still managed to gain over 100 points. How? Well, it was driven almost entirely by mid and small cap stocks, stepping right up and rallying aggressively. So you're probably wondering, where did all that money actually go? That aggressive buying interest didn't just vanish into thin air. Instead, it executed a massive sector rotation, pivoting straight out of those memory chips and pouring right into critical infrastructure. The underlying thesis here is just fascinating. Think about the relentless power demands of modern data centers, all fueled by this AI boom. They require continuous computing and huge cooling infrastructure, and all of this is forcing a major structural pivot towards stable baseload energy, mostly nuclear. This shift is triggering some massive expectations for small modular reactors, or SMRs. We've got two huge catalysts driving this right now. First, the U.S. industry is finally moving toward actual real-world project orders. And second, Korea's new 2026 tax reform plan just officially designated SMRs as a national strategic technology. That is an absolute game changer. Because of this, construction stocks tied to this whole nuclear and data center build-out absolutely exploded. I mean, GS Engineering and Construction rocketed up over 18%, and Daewoo E&C was right behind them, clocking a 14% gain in a single session. This explosive capital rotation drove the broader construction index up nearly 9%. That officially marks the largest single-sector gain across the entire KSIP today. Just huge, undeniable moves. But, to truly gauge market sentiment, we really have to look past the surface-level price action. Let's decode some of the hidden signals in the underlying order flow to see what's actually happening behind the scenes. Okay, here is the absolute key takeaway. While the total trading value held super steady at a robust 27.9 trillion won, the overall net directional flow sharply declined. We're talking foreign net selling dropping 87% and institutional net selling falling by over 72%. So what does that actually mean for us? Well, when trading volume is high, but that directional selling shrinks, it proves that market participants aren't just blindly panicking. This targeted selling was entirely about individual stock risk. It definitely wasn't a signal for some broader market collapse. So the crucial point I want you to remember is this. Today's concentrated flows reflect a surgical, very specific reassessment of the semiconductor space, not a widespread aversion to risk. Capital is simply rotating, and that leaves us to watch exactly where it lands next. As the market aggressively rotates from memory chips straight into the concrete and steel of the AI infrastructure boom, the entire landscape is literally shifting under our feet. So the big question is, are you holding on to yesterday's tech darlings, or are you positioned for the nuclear-powered data centers of tomorrow? Something to think about. Make sure to subscribe to get these insights before the New York market opens. Catch you next time.